Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday evening, the 9th of July, 2020, 6 p.m. Central Time. I'm wearing a t-shirt. It is so hot in our house. We lost the air conditioning, and we're setting records in the Chicago area for heat. I mean, at nighttime, it's 90 degrees. I have a room air conditioner, but I have a bigger home, and you can't put one in every window. I guess you could. Tomorrow, they finally got all the parts and they're coming in and doing things. Wow, interesting time for everybody. All right, so what happened today? Well, we saw claims data and they're not falling dramatically, and we know that the amount of cases going up, that's big. We know that at the end of this month, July, we're seeing the end of that $600 a week period unless the Senate can get something done with the House of Representatives. The House wants to give the $600 extension through the end of the year, folks. However, the Senate is saying, we shouldn't be paying people more money than if they could get a job and their employers want them back. What are we doing? And that is a problem, and I think it has to be addressed if you're going to do something like that. So paying people to stay home, and they'll say, why should I go? It's COVID. I make $600 a week versus I work my ass off and I get $400. I'm giving you an example. And if you think that doesn't exist in a big city like Chicago, wrong. Not everybody does real well. All right, what else happened? Supreme Court today. Supreme Court handed down a very mixed decision. Number one, they didn't say no to Congress wanting to get the president's tax returns. They said they'll send it back to the lower courts so that eventually they can disperse whatever they have to, and then if it's challenged again, then the court can get a narrow. What the court really did is bought the president time. Not intentionally, but that's what it is. We probably won't see Congress get the president's tax returns until after the election. When you take a look, though, at what happened in the Manhattan District Attorney Office, they had a win. Now, the question is, when do they get delivered the president's tax returns? I don't mind going on this national news thing and saying, if they get them, they're going to be leaked. That's what I believe. Doesn't mean I'm right. I hope I'm wrong, by the way. But if you can't control things in the White House and there's people that are undermining things, and now you're going to take it to other areas that historically aren't the president's friends, I have my doubts. Okay, I'll let it go at that, but that's what I think broke the stock market. I don't think I'm the only one thinking that way. But we got a mixed day in the energy. So let's go to the stock market. I put up this number yesterday for you, 3161.25. That is the last rally high. We have lower highs on a closing basis, and then we made the lower lows, right? So we're coming up. Right now, we're 18 points away from it. As you know, yesterday, we're basically over it, so you've given that up. This is a close-only chart. That doesn't mean the bias isn't up. As long as you're over this 18-week average, that bias is up. The question is, does the market want to challenge that number? When we take a look at the action here, sometimes I just feel bad that I keep saying the same thing, but you're caught here to here. That's what you're caught in. You're just going sideways. If you're trying to make something out of nothing, shame on you. It's not there. This market's just drifting sideways at this point. Tonight, the market established what? Well, do we have these arrows higher, or should I have a down arrow here and here? That becomes the question. And guess what I think? I think they should be down. And looking at this, we have lower highs and a lower low. I made a mistake. I made the mistake here too. So I think the swing line is down, and that's me. I made a mistake on this. And support the 18-day average of closes. The Bollinger Band resistance is proven right on the money. Look at that. You're fighting right against it. And slow stochastics, watch out. They're starting to turn what? Potentially down. Now, did they embed? Both numbers on Thursday were not over this. You're just overbought. You have an overbought market that's starting to show signs it wants to correct. The problem is you're in this tight band. I apologize for those arrows being wrong. I didn't recognize it until I just looked at it with you. And I do this each day for you. When I take a look at the NASDAQ, you still have the higher lows, higher highs, and what I called gorilla glue. You're just stuck at that upper Bollinger Band. Very, very bullish scenario. Now, I have repeatedly said we have a tale of two worlds, two cities is what it really started from. The first city is the NASDAQ that is humming along in that area down the road, 2030 from now, another 9 years, and everything's technology, and that's how it's all going to work. Then we have the other indices, which are the old indices. They're not part of this. Now, we all know that isn't quite the game, but it's how it's working. And the valuations, well, there is no number. The market doesn't care about that. The market's looking for a market that can give appreciation in stocks that have fallen into the love nest, as I call it, the tech stocks. And it's believing that because yields are so low, that's the place to be. That's what I think's going on. That's why in this market, you cannot even think of anything but on deep breaks, the trade wants to buy. When you lose the embedded reading, I'll say different, and you haven't had that. The Dow, this is that other world. Look at how suddenly the market's just narrowing in here. Now I can take this arrow and I should be putting it here. I can see just what I've done wrong. I was rushing to get this done, and I think the heat in my house is getting to me too. But you have nothing here. You've got lower highs, lower lows in a downtrend. Why is it suddenly a downtrend? Because the current prices are under the 18-day average. The bias is down and momentum is turned down. If you take out today's high, and by the way, where did today fail in the market? Let's come back here. This is yesterday. I want you to look at this gray dashes right there. That's the 200-day average. Remember we were talking about this yesterday? Pretty stiff resistance. If the market's going to break down, 25, 129, 130, that's the target, I think, in the market. If the market's going to prove that no, it just wants to continue whipping traders, you'll get over today's high and that was 26,029. And that could mean that the market stalls there because you're right at the 200-day average or goes to the upper Bollinger Band. Again, I hate when you enter that tight of a range. I tell my traders, my paid subscribers, you stay away from those type of trades. By the way, this has continued to be a bear market ever since lower highs. They have not been taken out, these lower highs. You stalled for a bit as you just came in by the 18-day average of closes, and now lower lows. You're still in the downtrend in that market. In the Russell, what number did you go to? And let's talk about theory. Here you are in a market that's got a lower low, higher high, made a run for the 200-day average in the upper Bollinger Band, couldn't do anything with it, fell back. If you break, and I don't know if you'll break or not, because you got flat momentum, you have no trend, you're just hanging at the 18-day average. If you break, I'm looking for support at 1379, let's call it, or the resistance up here at 1458. It's going to be one of the two. Those bands are getting so tight. Tell me what it did. Why did it just stop there, right? That's what I'm trying to explain to traders. And I do in my charting course. In the VIX cash, if the market breaks more, I continue to expect the pros will write puts at 2560. What are they doing right here? Well, you ended the downtrend. You now have higher lows, higher high. You kill that if you take out today's low of 2651, that puts back into play the 2560, but I don't think it'll stop the pros from writing the puts. If you rally, I look for pretty stiff resistance at these three numbers, 2869, 3036, and 3178. In the bonds, you're at the upper Bollinger Band. Finally got there. This is what you look like so far. And I said, if you get going, maybe you hit the upper Bollinger Band, but I don't know if you're going anywhere. And so far, I'm not wrong. Trend up, but in this narrow band. Is it going to break out? If it does, on this pattern, it can be to the upside. Why? Let's take off Friday because we don't know what the settlement will be. Both numbers over 80 on Thursday, not Wednesday. So today, at the very most, can be the second day where both numbers are over 80. You're overbought. You've got to get through Monday if you're going to have those numbers. If you start slipping to get to the 18-day average at 178.4, you'll break through this 178.14. You won't be in a trend. In the 10-year note, pretty much the same story. You're in such a tight Bollinger Band. When that occurs, I write and I tell my clients, stay away from it. You get frustrated, whipped, then when the next right trade, whatever that means, right, the next reasonable recommendation comes, you go, nah, just I got to lick my wounds, and then you miss out on the next trade. Have you been there? I've been there. I wrote a book called The Psychology of Smart Investing many years ago. First run was 5,000. I think Forbes bought that. And I'm telling you, you learn these things over time. Psychology in trading is important. In the dollar index, you went down to the lower Bollinger Band yesterday, again, and today you're turning up. No surprise. Trend is down, but very oversold. Not worthy of adding to shorts, maybe taking money off the table is what I think the pros are doing. And on this pullback in the Eurocurrency, this is neat. You got overbought. Now you're correcting that after hitting the upper band, which we expect. The question is, will the market hold the 18-day average and not take out 112.75.5? Now it's such a close number, I don't know what they'll do with it. It's a Friday. I think you have to wait and see, but I would like it to do that because then we start with a trend in this market. Japanese yen, it's caught in that pipe. You can see it. You've taken this width, you keep narrowing. It's almost like a bottom, right? And now you're forming that neck, and you know, if you had something bubbly in there and you shake it enough, you pull the cork, it's going to squirt all over the place. Well, that's what price does, is it winds itself in there. Bitcoin, similar pattern, very narrow trading range. The market went flat on you back here in June and hasn't done a darn thing. You're just marching around trendless at this point. The differential between Brent and WTI favors the Brent market right now. The numbers are climbing up. So you were recently under $2, now you're $2.54. And you are in sideways action. I mean, for me, it's vacation time when I look at patterns like that. The trend is down on the swing line, the bias up, and momentum is correcting an overbought condition. Identical in the WTI, I mean identical, and just sort of hung right into that narrowness right now. Gasoline, I expect it to do the same thing. And in that gas, disappointment. Here we are with all this heat and it's not rallying. Duh. And it got a nice reduction. It only had, I think, 56 billion cubic feet in there. When I see bull news and a market doesn't react favorably to it, I walk away from it. I wouldn't have had anything on it anyways, but I walk away mentally. Do I think the pros will nibble at 177? 1.777, I do. Their stop would have to be under the 170. It's not an easy trade. It's almost an $800 risk. I don't know if it's worth it in this, but that's the only play I'm seeing. As you know, what we try to do is give you a lot of information on technicals. Now, a lot of you bought our charting course. I really appreciate you did that, and I've already received emails from you how much many of you like it. I haven't heard from people that don't like it. If I do, I take it to heart. And I make notes, and when I redo the course, I correct the things people don't like. But I really think it's a great course. But this goes with it hand in hand. This is a primer teaching you all these different things. Remember the Arun indicator? That's price-time relationship. Gann, Elliott, options primer, money management. Don't forget money management. To me, it's as important as any technical indicator. If you don't keep the money in your account, you can't keep trading, right? If you get loose on a trade or a thought process and you lose, it's because you missed something. I missed pointing arrows here, right? It happens. Got to have a checklist. In any case, go to our website, www.iraepstein.com. You'll see free offerings. This is there and a host of other ones. You can click here to get there as well. And I'm Ira.